right, so before I do this, I do want to apologize for any background noise. My kids are home for the week fall break, but I definitely wanted to just kind of give you guys an idea of what really happened here and how you could possibly capitalize on this in future market events. All right, so just gonna do this for this particular pair right here to show you what I was looking at in particular. Of course, you have this zone here. This is a supply zone here as well. Um, Also, you have a zone here at the top. Now, originally, this is where we were initially looking for the sell on the USD CAD here at the top here to kind of be on the safe side, but we could also get a reversal here in this first zone right here that I drew. Okay, so here's how you can identify these type of setups. This happens all the time. Of course, you got supply zones here as well, but here's how we knew that this pair was going to reverse, and here's how you possibly could have entered this. Okay, now if you look at this particular pair, you actually have a top here and you have a top here. You can call it a double top, triple top, quadruple top, or whatever. I just call it a double top. That's number one. Secondly, you have a M pattern. Okay, so whenever you get a push up like this, then you get a pullback down, you get another to retest the top. Okay, you're probably going to get another move down, which is what happened here. Now, to confirm that, how I typically trade these is you can either enter here at the top as soon as you see that M forming and just set your stop loss just above that previous high over here. Okay, or you can just wait for the break here. Okay, and as soon as it break, you enter, because that confirms that pattern. And if you would have done that even at the break, okay, let's just consider it here to here, you call 89 pips. Now if you took it from the top, which I probably would have, and just set my stop loss just above that high, you're looking at 155 pips. Now these patterns typically happen all the time in the market on various time frames, especially when you have strong moves up that hit certain supply and demand zones. You'll get a pullback, then you'll get a retest, then it comes down to form that M pattern, and it drops or goes up, vice versa. So that's pretty much it. This is on a 3-hour chart. Let me see how it looks on a lower time frame. All right, so another way that you can get in, which is what I do sometime as well, will be whenever the M pattern forms, I wait for the impulse, and then we're just gonna do it from here to here. You get a correction, and if you look closely here, right here in this area, that is a 618 correction, and then you get the drop. So even if you weren't sure, you got the M pattern form and you got that push down, then you see the market correcting, you just wait for it to hit the sweet box zone, 38% to 61% to 618 is what I like. And then as soon as it hits there, you jump in on the next counter open, and you would have caught a lot more of that move. Let's see here, gonna come here to here, you still over 100 pips if you would have did it that way. So super simple. I know that was fast, but I just wanted to share that quick tip with you on M patterns. They happen all the time in the market. You just have to know how to trade them, and that's just a quick tip. And if you want more information, detailed training on how to do this, you can go to UOPFX.com. Be sure to like and subscribe to our YouTube channel. And if you're on Facebook, like our page and share this. Thank you. Bye-bye.